Welcome to Merge FX Trading Hub, where I simplify Forex and smart money concepts so you can grow your account with confidence. If you're new here, kindly hit that subscribe button so you don't miss any of my weekly trading breakdowns. Alright, so today we're going to talk about CRT plus fair value gap. Alright, I believe we all know what a fair value gap is. Okay, and some of us also understand what candle range technique is all about. But right here, I want to break down how I trade using CRT and fair value gap. Okay, most traders lose money because they don't know where price is balanced and where it's not. Okay, so in today's video, I'll show you how to use CRT and how I use CRT with fair value gap to trade with smart money. Gold on gold. Basically, we could find a candle range high and a candle range low right here. Now this is what we're going to make use of. We're going to make use of this particular candle. You can see this is where this candle is. This is where this candle got to, which is the highest point it got to, and this point is the lowest point it got to, which is where we are going to mark. Okay, that is where we're going to mark. Right here, we're just going to pick this to mark the high, the candle range high, and then figure out the candle range low. Okay, you can just label it, the candle range low and the candle range high. Now, what is CRT? Okay, CRT is candle range theory. Okay, and markets build a central range, which is like an equilibrium zone for before an expansion. Okay, now you just have to think of it as price. Okay, you just have to think of it as price. And for you to trade using this CRT, you need to understand what fair value gap is all about. And if you don't know what a fair value gap is all about, I'm going to make a video regarding fair value gap, because fair value gap, before it decides where the trend is going to head to. Okay, now why CRT matters in trading is because it shows you where not to enter blindly, because you cannot just jump into a trade because market swept the candle range low or the candle range high, and it helps you avoid chasing for false breakouts when you drop down to your lower time frame, such as the 2 hours and 1 hour, which is the analysis time frame rather. Okay, and it gives a framework for liquidity build up. Okay, now like I said, if you don't know what a fair value gap is, I'm going to explain what a fair value gap is. But basically, let me just give a recap of what the fair value gap is. Now, a fair value gap is an imbalance. Okay, it's an imbalance zone left when strong buyers or sellers move too fast. Okay, I'm going to show you guys the example here, but this video is not regarding fair value gaps. All right, and most of the time market often come back to fill it before it continues. All right, now to identify a candle range is very important. To identify a candle range is very important, and to wait for the expansion, which is the breakout of the range, is also important. Spotting a fair value gap in direction of the breakout is also important. All right, because your entry point would be right when price retraces into the fair value gap, and your stop loss can be right below the fair value gap or the liquidity right below it. Now your take profit would basically be the liquidity above. Now that is to say, if market sweep the candle range low, we are expecting price to move all the way to the candle range high. Okay, we're expecting price to move all the way to the candle range high. Now you are only permitted to risk 1 or 2% of your account per trade. Okay, so I'm going to show you guys an example of a candle range trading technique on SCUSD, and we're going to check out another pair to see how this works. All right, now a recap of what CRT means. It defines balance and expansion, and fair value gap is a precise entry point after breakout. Okay, now together with your CRT and fair value gap, we have higher win rates. We have higher win rates. Now, if you don't see these criteria, you don't need to do what, take any trade. Okay, now if you found this breakdown useful, hit like and subscribe, comment fair value gap mastery. If you want me to do a full, lesson about fair value gaps, how I use fair value gaps, because identifying a fair value gap doesn't mean that it's going to hold. There are other things you need to look out for, like when the fair value gap is large, you look out for the 50% um, consequence encroachments and all of that, right? Now looking at this right here, we marked our candle range high, right, which is right here, and then a candle range low. Now you can obviously see that this particular candle right here was yesterday's candle, and you can see today's candle currently forming, right? Today's candle currently forming, and it has swept what? It has swept the candle range low. Now all you need to do is to drop down into a lower time frame. Now let's drop into a 2 minutes, a 2 hours time frame. Now dropping into a 2 hours time frame, you can equally find your candle range high and your candle range was low. Now looking at this, where your attention needs to be drawn to is right at about this point, guys. From this point is where your attention needs to be drawn to. Okay, now since our attention has been drawn to that area, all we need to do is to what, figure out a fair value gap. And if you understand what a fair value gap is, then you would agree with me that this is obviously what a fair value gap right here. Now mind you, you can use the 1 hour or the 2 hours. Now let's drop to a 2 hours time frame and see the 1 hour time frame and see if we can find a fair value gap. Yeah, right here we can also find a fair value gap, but it is not as visible as that of the the 2 hours. So in this case, we're just going to use the 2 hours time frame. All right. Now looking at this, you can obviously see that that is the fair value gap over there. And what is the entry technique? The entry technique is to wait for price. As you can see right here, price have already tapped the fair value gap. The entry technique is to wait for price to do what? To come back into the fair value gap. Okay, to come back into the fair value gap, because you can, before you can take a trade towards the upside, which means after you had identified this fair value gap, you need to place an order or wait for price to do what? To get to the fair value gap before you can take a trade. Now you can decide to wait for a confirmation, market structure shift, around the fair value gap or anything at all. All right, but in this case, just know that we are using the fair value gap to do what? To take a trade. Now let's use the fair value gap to take a trade. That means we would be risking um how many pips right here. Let's check how many pips of the fair value gap. The fair value gap is about, let's say, 30 pips. It's a good stock for good 30 pips, and take profit towards the external range liquidity, or you target what, 90 pips, which is a 1:3 risk to reward ratio around here. Okay, you can see that price had already gone 1:2 right here already. Price had already gone 1:2 right here. With proper risk management, you can trade the CRT. But if you can hold, to the external range liquidity, this is obviously 230 pips, right, guys? 230 pips, and that is also a good route to reward. But for the first take profit, it just has to be what, 1:3, and 1:3 is 30 pips for 90 pips, right? And once this is done, you're good. You're right, good. Okay. Now, for you to adjust your stop loss depends on what? It depends on the nature of the market. For you to adjust your stop loss depends on the nature of the market and what you can obviously see, right? And what you can obviously see in the market. Now let's go to the next example. So I'm going to use GBP, um let's say GBP USD, GBP USD, guys, GBP USD. Now for GBP USD, guys, let's follow the same procedure. Let's follow the same procedure. Okay, this has already played out before now. As you can see, I marked the candle range. Now let's look at this particular candle right here. This particular candle, this candle, bullish candle right here. Okay, um all right, let's look at this particular candle right here. You can see that we have what we had our candle range high being taken out, right? Our candle range high right there, and our candle range low right here. You can obviously see that price did what? Price took out what? Took out the candle range high. And obviously see that price took out the candle range high around this point. Okay, and since it took out the candle range high, what I want to do, we have to drop to our lower time frame and make sure we find a fair value gap, right? Find a fair value gap, and as you can see, obviously right here we got a fair value gap right about this point. We got a fair value gap right about this point. Now in this case, we got a liquidity gap above the fair value gap. Like I said, if you want me to do a video about fair value gap or explaining how I trade using the fair value gap, just comment in the drop a comment in the comment section, so I'll see that and create a video regarding how I trade using the fair value gap. Now looking at this point, you can obviously see the FVG right there. You can obviously see that price, after creating what? After creating this fair value gap, after price swept the high, the candle range high, it created what? A fair value gap around here after this institutional move. And what happened? Price came all the way back around the fair value gap before dropping to the candle range low, guys. All right, that is strictly how I simply trade using the candle range technique. So guys, if you find this helpful, please hit on the subscribe button and turn on the notification there for more contents like this. See you guys.